right now. Let's go to Edward Lawrence. He'll help break it all down for us. Edward.
Yeah, Charles, a lot of discussion about this. This is from the September meeting, and they talk a lot about the forecast. Now, in the forecast for most all of the participants was factored in fiscal stimulus in the second half of the year. It says that noted the heightened uncertainty that fiscal stimulus was important. They said that a new package, would help a faster than expected recovery. So a new fiscal package would help boost the recovery towards the end of the year. The participants say that supportive monetary policy that they have currently and the backstops that are available would help if there is no fiscal stimulus coming. But they did say that recovery would be weaker than expected if there is no more fiscal stimulus. They do also say that they observe the incoming data as of now, because of the CARES Act specifically, was faster than expected. The bounce back faster than almost all the participants expected coming back. But again, that's because of the fiscal boost, which is why they're saying we need it in the second half of the year. This meeting also talked about the new framework for the Federal Reserve. The big shift there, talking about an average of 2% target, allowing the economy to run a little bit hot at some point. Also a shift in the maximum employment and the thinking on maximum employment, talking about the Fed possibly not hitting a milestone. When it gets to where it thinks unemployment's bottomed out, then they will start raising rates, allowing the economy to run a little bit hot. It says all participants agreed that the framework review was appropriate to be able to go forward. Now, there's a lot of discussion here about forward guidance and extending that forward guidance. They're saying most participants said explicit forward guidance based on federal funds rate and when it should be raised should be a criteria for lifting the federal funds rate, should be in the FOMC statement. A couple of participants, though, saying they said even more stronger language should be in there, less qualified outcome-based forward guidance, that they should be judged more clearly, maybe specificity inside the FOMC statement. So a lot of discussion about how detailed the forward guidance should be. But again, the bottom line in this report is they believe that fiscal stimulus is needed. Back to you.
Edward Lawrence, thank you very much.